So the appraisal is required by the lender, and it is required to be ordered through an appraisal management company, or what's called an AMC, appraisal management company. So the appraisal and even the process of ordering the appraisal through the AMC is designed to protect you as the buyer and the lender, to make sure you're not purchasing a home that's being overvalued, and it's going to make sure that the lender is not over lending on the home and they don't get stuck with a home that's not worth the amount that they lent the money on, and just in case it forecloses. So the house is the actual collateral for the loan that's being sent to you or being given to you. Today's topic is about the difference between an inspection and appraisal. But first, I'm Brandy Whitmire. I am a direct lender, broker, banker, handle all of your loan needs nationwide, and also any of your real estate needs or questions nationwide. So if you have anything at all, if you need any question, have any questions, you can refer back to some of our videos, reach out to us through DM, email, phone, bwhitmire@financemyhome.com, 214-660-5000, and we are here to answer any of your questions always. So what is the difference between an inspection and an appraisal? So this is something that's been coming up a lot lately with some of our homeowners and some of our home buyers. So an inspection and an appraisal, are they both necessary? What are they? Do we need them? They are very different and serve very different purposes. So this comes up again during the purchase time, not really refinance, because this is when the buyer actually does an inspection during the option period. So the inspection or the inspector is solely hired by the home buyer, and it is designed to protect the home buyer only. So the lender never sees that. It's designed to protect the home buyer so that you know what you're getting into in this house, okay? So the buyer basically hires the inspector, and it's typically within the first week of the contract. You really want to, once you've entered into the contract, you want to go ahead and get the inspection assigned or scheduled, and so that you can get that completed and done. So this is typically done within the first week or so of the contract, and the contract will read this as an option period. Okay, so the option period is typically about 3 to 15 days, where you're going to put down a small amount of money to be able to get out of the contract in case you change your mind or find out that things in the in the inspection that you didn't like, or that you can't come to terms with the seller. So the buyer, or you as the buyer, will meet the inspector at the home that you're purchasing while they're doing the inspection or when they're done. So typically you want to go at least when they're done, so the inspector can go through the house and show you any of the major problematic areas. I don't recommend being there the entire time with the inspector per se, because it's going to take them about 3 to 4 hours to do it, and you don't want to get in their way the whole time. You want to be able, with them to be able to do their job and go through their due diligence and then come back to you with what is absolutely necessary. And then you can ask your questions at that time. But the inspector stays at the house for about 3 to 4 hours, and they're going to go through every single crevice of that home. So that means that they're going to, from the roof to the foundation, so, and everything in between. So roof, foundation, plumbing, all the appliances, the electrical, like literally every single socket and every single crevice of that home will be inspected thoroughly from the inspector, and you're going to get back a report that's going to be probably about 20 pages long. I've seen inspection reports come back 50 pages long, just depending on the size of the home. So there's going to be a long list. That means that's going to be a long list no matter what. Even if it's new construction, no home is going to be perfect. So no matter what, you're going to get back a list that's going to be basically your to-do list of things that need to be looked at or need to be addressed now or eventually on the home. So what you're going to be looking for here are major problems, like with the foundation or the electrical, or the HVAC, the roofing. If there's leaks in the roof and and it's leaking into your attic, and that's going to cause mold or whatever the case, you want to know of these major problems so that you can then go back to the seller and have your realtor put together a repair request or renegotiate the terms of the contract. Maybe you're willing to live with these things, but now since you'll have to fix them yourself, you want to lower the contract price, or you need the seller to fix them before you're willing to actually go forward with the contract past that option period. So when you are ready to move forward with the terms of, move forward with the home, and you're okay with everything that came back on the inspection, you've come to an agreement with the seller, if any at all. Most oftentimes there's not really anything that you're going to go back and fix. Most of the time, unless there's going to be problems, you're going to be okay. But the inspection is made for that, right? It's to find the things that are not clearly seen. It's to find the things that are maybe fixed with a Band-Aid that you need to know before you make this huge purchase, right? So when you're ready to move forward, it's now going to be time to order the appraisal, okay? So now the appraisal is different. The appraisal is required by the lender anytime you're purchasing a home. Unless you're paying cash, then obviously you don't need an appraisal. You just agree on the price with the seller and you can move forward. Still recommend doing an inspection. Even whenever I'm buying homes, I still do an inspection, because that time, that 3 to 4 hours, to pay $300 to $400 for 3 to 4 hours of someone that this is their job every day, day in and day out, and knows what to look for, is well worth it to me, because it gives me a very good to-do list on everything that I need to do in order to make the house in good shape for the next buyer, right? So the appraisal is required by the lender, and it is required to be ordered through an appraisal management company, or what's called an AMC, appraisal management company. So the appraisal, and even the process of ordering the appraisal through the AMC, is designed to protect you as the buyer and the lender, to make sure you're not purchasing a home that's being overvalued, and it's going to make sure that the lender is not over-lending on the home, and they don't get stuck with a home that's not worth the amount that they lent the money on, and just in case it forecloses. So the house is the actual collateral for the loan that's being sent to you, or being given to you. So at that point, we order, as a lender, we're going to order the appraisal through the appraisal management company. They're going to set an appointment with the appraiser and the seller, and within the first, hopefully, couple days, depending on the area or the busy season. But the appraiser will then go to the home. They're going to be there about 30 minutes, and that's it. And they're going to be taking pictures of the inside, of the outside, of all the rooms. They're going to be measuring each room for the square footage. They're going to be getting a count for the rooms that are there, and the amenities. So the number of living rooms, dining rooms, bedrooms, bathrooms, utility rooms, number of garage spaces, the sheds, the pools, any kind of amenities like that that's going to actually add value to the home. But other than that, there's not much detail. It's not nearly as thorough as the inspection process with the buyer. So at that point, after the appraiser's done all of his work, the appraiser's going to then go back and do the desk work, right? Going to go back and do like the actual metric work to the loan, to the appraisal report. So they're going to go in, and all the information they got of the number of rooms and the lot size and the square footage and all of that, they're going to enter it into their system, upload all the pictures, and compare it against similar properties in that area that have been sold within the last 6 months. So typically within the last 6 months, unless it's going to be like a rural area, or it's an area where there's different types of homes, different sizes of homes, different builders, different lot sizes, things like that. Then sometimes we'll go above and allow more than 6 months, but typically it's going to be within 6 months in that area, in a very similar style home. So like a Tudor to a Tudor, or a ranch style to a ranch style, or whatever, within the same amount of bedrooms, give or take one, same amount of bathrooms, give or take one, and typically within the about 500 square feet to 1,000 square feet, because that's really where you're getting most of your values. Like the price per square foot is what we're looking at typically whenever we're doing comps. That's one of the major things that we're looking at. Then of course, number of bedrooms, number of bathrooms, if there's a pool, things like that. Like an appraisal. I had someone call in the other day and said, "Hey, I bought this home for basically $250. We just put in a pool for $75,000. So I'm thinking my house will come in and probably around $325 now." And I'm like, no, that's not how it works. You're not going to get the value, that $75,000 off that pool right away, because it's just going to be compared to houses that have been sold within the last 6 months that have a pool within the same kind of parameters of that home that's being done, the appraisal is being done on. So it doesn't necessarily mean that just because you do upgrades or whatever the case may be, it doesn't mean that you're going to get that full value back right away. It might need to take time, or you want to do the upgrades in the home that's going to be relevant to or comparable to the homes that are in that neighborhood at that time. So once they enter in all that information, they upload all the pictures, they're going to go and see and get the information of the last 6 months of the properties that have been sold. They're going to go in and give their opinion of value. So once that's done, they're going to send in the report to the lender. It's going to go through some quality control. Then it's going to go to the underwriter of that lender, and just to make sure everything was done correctly, it passes all the tests, all the quality control tests, and to make sure that the appraiser gave it to us as is. So allowing this to go as is. So if not, if it might be in lieu of repairs. So at that point, we'd have to go back to you and say, hey, we got the appraisal back, and this and this and this needs to be fixed in order for the home to be insurable. At that point, you can then again go back to the seller and say, hey, I need these things fixed. Or we can move you over to maybe a renovation product that will allow for those things to be fixed within a renovation loan. So, it just depends on, the product and, what you want to do. But there's going to be an option just in case the home is not insurable. And again, no home has to be in tip-top shape or perfect for you to get a loan. That's what the renovation products are for. So we've got 4 different types of renovation products. We've got 2 renovation products with FHA. One's a full consultant, one's a streamline for just maybe cosmetic things. We've got a home style renovation loan. That's a conventional loan for you investors out there if you want to do something like add a pool, add an addition, things like that. And then we have VA renovation loans too for our veterans. We have a VA renovation loan that also has its own set of parameters. So there are options no matter what type of home that you're buying in order to get the loan approved and get this done. This is also true with refinancing. So right now, refinancing to renovation loan is huge because there's a whole bunch of equity and there's so much opportunity to either do cash out or do a renovation loan because of the equity, because now you can go and get the upgrades that you want. You can add the pool that you want because there's room now within the appreciation of that loan. So, if just doing a regular refinance right now, if we got you closed in the first week of January, it's possible that you could defer that January payment and skip that February payment, take those 2 payments and pay off Christmas debt, or do whatever you want with it, or take that money and put it back on towards your loan. So right now is a good time to look at those options. And December is a kind of a good time for buyers and sellers, like weirdly a good time for buyers because there is not much inventory, so there's more ways to play. And for sellers, it's the same. There's not a lot of inventory out there, so that you have more buyers per property typically in December. So December is a very good time to look and play around with seeing what's out there and maybe putting your home on the market during this holiday season and also when it's cold outside. So some things to think about, some things to look at. Again, after the appraisal's done, that house is approved. Now you just got to make sure you've been approved. So hopefully during this time you've sent your lender, hopefully that's me and our team, but you've sent the lender all of your documents, everything that they need to get you as the client or as the borrower approved. So there's always two things, right? We need to get the house approved to figure that out. Then we need to get you approved to figure that out. Once we have those 2 approved, we're ready to get you to closing and get you into the home and move on. So, and as long as you have those two done, we're good. I always like to plant these seeds just in case you think, you're driving down the road one day, you know what, I heard about that renovation loan. I need my my kitchen updated. Hey, I heard Brandy saying something about deferring a couple payments and getting some cash out. I'd really like to pay off my debt. Hey, I heard about it being a good time to put my house on the market. Let me just send her a message and ask her a question. I'm always here for you. So happy to answer any questions, whether you're doing a loan or not. But please reach out, ask questions. I'll get them answered for you, or I'll send you to the right place. So direct message me on any of the platforms. Email me, bwhitmire@financemyhome.com. You can call us at the office, 214-660-5000. We are always here. I love giving you guys this information. Hopefully this video or this audio came back not warbly like the other one. I do think the other one was better because, you know what, it's always like taking a picture, right? The first picture was always the best. But hopefully you still like it. And if you're one of the 89 people that listened to it before, maybe you can let me know what you think, if this one was good or the other one. But anyway, I'm going to let y'all go. I'm going to get out of here, and I will see you again next week, next Wednesday at 6 p.m. Unless I have technical difficulties, and it might be 6:15 or even maybe 7 when I see you again. So hopefully not, but I will see you again next week. Reach out whenever. We're here for you. Thanks.